Hey everyone, thanks for joining me. Really appreciate you spending some time here. This is really an education, it's a mind shift, it's something that I think is so powerful that we all need to know about. And I will be running a little bit of a video here for you to check out, and then I'll pop back at the end, and I'm probably going to recommend some other things you can do, doing your own due diligence. And again, thanks so much for joining me, and enjoy the show. Again, I'm so excited to have you here today. As I mentioned before, this is not going to be any type of sales pitch or hard sell. Anytime during the presentation, training, or even at the end, there will be an opportunity to engage if you so choose, but trust me, I'm just trying to get the word out to business owners, to individuals, families, but today this is all about business at this point. So first things first, I want to save you some time, right? I know you responded to an invitation, and hopefully you've got enough that makes you want to stick around so far. But I just want to explain what I think will be the biggest benefits that you'll realize by sticking around to the end of this webinar. So without further ado, let's take benefit one. And what you're going to learn today is about a simple and flexible, immediate, definitely hassle-free way of accessing cash. But there's going to be a twist on this, so and that I'll give you a quick hint. The twist is you become the creditor, not the debtor. So that's benefit one. This sounds good so far, right? Next up, benefit two. How to make your business recession and life-proof. Okay, meaning even if the economy tanks or your house burns down, your business will be protected, and you won't be at the whims of the big banks or life's unexpected twists and turns, which obviously come along. Now, speaking as someone who has literally had his house burned to the ground, I wish I would have loved to have known about this benefit ahead of time. And I'll share more about that story later, but for now, I want to make it clear that's another benefit we'll be covering today. Last but not least, my favorite part, benefit three. This definitely is the most exciting part. So I'll show you how to keep more of your revenue. I know, believe it or not, keep more of it. Increase your profitability without the need to increase your revenue. Right? You can increase your revenue, but there's no need for you to increase it to increase your profitability. I'm going to show you how to reduce your tax liability now and in the future. In other words, I'm going to help you find the money without sidetracking your business investments or any of your personal lifestyle planned or anticipated expenditures or even dreamy expenditures. So let's move on and show you what this is all about. Now that sounds excellent as well, right? I know it may sound like a lot to deliver, maybe even too good to be true, but I can assure you that it's not too good to be true. I want to start with a quick question. It's a real easy one. How many of you love Disneyland or Disney World? Everybody's a fan of Disney, right? I know I'm a huge fan because of, just the forethought that, Walt had. I know the first time I went to Disney World, I was 17. I had never even been on a plane before, so I show up going down what I think is called Main Street in Disney World, Kissimmee, Florida. I was just amazed, how immaculately clean it was. Obviously, there's an air of fun and they say it's sort of magical. It's like the way life should be kind of feeling. And it really struck me that way. But the reason I'm bringing it up, Disneyland, the original out in Anaheim, California, would never have come to be if Walt Disney hadn't utilized the technique I'm going to share with you today. Quickly we'll travel back in time. to tell you some of the story. It was 1952, and Walt Disney obviously had already created some movies and characters, and he was a successful businessman. But he had this idea to start a brand new business, creating a theme park based on his characters, and people thought he was crazy. Particularly people he tried to get to invest in this dream and this vision. So here was the deal. And stop me if this sounds familiar to you as a business owner. No bank would lend him money. He was successful. He had a great idea. He was capitalizing on something that was already, it wasn't like he was entering something totally new, but regardless, it was a new concept and the banks weren't having it. That's right. Nobody would lend to Walt Disney, right? Crazy. Heck, even his brother convinced the board of, the existing company to deny his brother any money from the company. And that's when Walt Disney, determined to make this vision of a theme park a reality, used a little known kind of secret. That's an overused term, I think, but definitely not utilized by many, and still not enough people utilizing it. And that's why we're here today. Walt got $50,000 from using this approach, this technique, enough to get the ball rolling and investors paying attention. And thanks to that one transaction, Disneyland became the first theme park of its kind. And the rest, as you and I well know, is history, right? But Disney wasn't the only one to use this powerful secret. In 1929, obviously the Great Depression, the stock market crashed and left James Cash Penney, a retailer who you know better as J.C. Penney, scrambling to meet payroll and other operating expenses. But thankfully, Penney knew about this secret that I was going to share with you as well. In fact, Penney used this approach to get the money he needed at a time when banks were failing, left and right. These are the big names, but there's small names that maybe you do or you don't know that have utilized it, and there's many that I don't even know who they are. But there's other practitioners like me out there spreading this word, so trust me, it's being utilized. But, we wouldn't have had probably the golden arches and that great success story called McDonald's without Ray Kroc. Ray Kroc utilized the same technique. There was a movie not too long ago where Michael Keaton was the star, played Ray Kroc. It was called The Founder. It's a great story about how Ray Kroc met the McDonald brothers, and I'm proud to say, being a New Hampshire guy myself, that they were born and raised in New Hampshire, but they had moved out west to California, and they had started up a business which eventually, they sold to Ray, and, he took it from there. But he obviously went on to revolutionize, actually really, create the fast food industry and totally push the envelope on the franchise idea, right? As you see in the movie, if you had a chance to see it, regardless of whether you read about Ray Kroc, things weren't easy. Never is, right? It's not easy to be a successful business owner, right? But he used this approach that I'm going to share with you for the first 8 years. In fact, it's been said that he used it mostly to keep the cash flowing to pay his key employees because, he needed some other people to help him. He didn't do it all himself, though. He was a crazy worker. At least they depict that to be the way in the movie. He was working day and night. But he used the deal with those cash flow problems in the early days, and, it created an opportunity for us to witness one of the greatest business stories in American history with McDonald's. At this point, you might be asking yourself, okay, John, so what's the secret? I thought you'd never ask. It's called infinite banking, also known as the infinite banking concept. And it was created by a gentleman, Nelson Nash. He developed it. He utilized it when the times were really tough back in 86 with some of the tax changes and so forth. and the interest rates were sky high and so forth. And he used this technique, and then he really worked with folks to refine it and really try to spread the word. He probably spent the latter 35 years of his life dedicated to this idea.
One reading of this book won't do the job. It's got to pique the imagination of a person, and they've got to go over and over and over it, because they're things that you don't see at first, because the more you see you didn't see. In essence, infinite banking concept is ridiculously simple, but it's complicated by the fact of the mindset that the general public has. They think that this can't be true because it is so simple. Well, the most important word really is probably concept. The others are modifiers. Now, it involves the flow of money. It involves the warehousing of money. But the more you see again, the more you see you didn't see. And so that's the reason for the word infinite. How do you describe infinite? You can't. When you define something, you put limits on something. Well, there's no way you can put limits on this. See, the idea that the banking function should be totally controlled at the individual level is a totally foreign idea to 99.9% of the world.
And there's so much to say about it. Now not a lot of people know about it. Trying to get to that tipping point where it becomes, standard operating procedure for business people, individuals. They don't teach you this stuff in any school, K through 12, colleges, universities, master's programs. It would be great if they did. But in general, it's a simple way to get access to cash you need when you need it. And the crazy part is infinite banking lets you do this without having to beg for a loan, submit income statements, tax returns, all the headaches, right? Pay any absurd interest rates, all that kind of stuff. It's a way for you to become your own bank. It's been one of the best kept secrets business owners and entrepreneurs just like you have used as a powerful tool for growth. To take advantage of opportunities, to weather downturns in the economy, various things that obviously cash allows you to do, right? The golden rule is those with the cash rule. First off, it gives you cash flow when you need it. Maybe you need money for new equipment, advertising, a new website, just about anything to run your business, right? Second, infinite banking helps you decrease cost and reduce your tax liability without having to rely on outside creditors or banks. Third, infinite banking helps grow your long-term wealth because you end up paying less in taxes and unnecessary fees, all while having compound interest work for you instead of against you. And that's another key element of this approach, compound interest. Let's flip the script. Let's have you be the creditor, not the debtor. Let's have that compound interest working in your direction, not in the bank's and lender's direction. And who better to explain such a powerful and important concept than who, some people claim was the smartest man on earth. Albert Einstein was known for many things, of course. Crazy hair, right? Man, that guy is identifiable. You see a picture of him, you just know who that is, right? Always that hairdo was perfect every time. Describing the nature of relativity through math and physics, E equals MC squared. I really still don't understand all that stuff. But anyways, but for our purposes, and to my point, did you know Einstein also was known for calling compound interest the greatest invention of the 20th century? Maybe quoted as eighth wonder of the world. There's been a lot of eighth wonders. But can you imagine him saying, he's been quoted as saying compound interest is the most powerful force in the universe? Pretty amazing that a guy like him would say something like that. He may be right. It's why banks own big buildings and huge skyscrapers, and the rest of us own smaller places and smaller homes, right? Because the banks, for one thing, they understand compound interest and they love it coming in their direction. And you're the one footing the bill. It's what allows to earn interest on your interest. I mean, simply put, this way you work hard for the money, you invest once, and then it goes to work on your behalf. Every single day, that money is working for you behind the scenes, whether you're working, playing, sleeping, vacationing. Now, there's 3 basic kind of rules to get the most out of compound interest. First, you must invest, keep doing it, roll those returns back into the pile, and then get returns on that bigger pile, and keep, if you got dividends, reinvest the dividends. I'll get into that. And then to keep adding money to it, because that's where the bigger the pile, the bigger the pile of money you get on the return. Now, I don't want you to get lost here. I don't think you're going to, or feel like this one is, some out there kind of approach. Out there. But this is an approach to cash flow management, cash warehousing. But I hope that by this point in our time together, you can agree with me that it's a legitimate, if not well-known approach, right? Just go look up these guys, Walt Disney, J.C. Penney, Ray Kroc, and see where they got some of their money to get started in the early years of their businesses. And of course, if you're a saver already, you've got some compounding interest going on, right? Because if you just leave it in there as a savings account, that certainly helps. For today's purposes, without turning this into an economics class, I'll explain a little bit more about how infinite banking works. In essence, you invest your cash flow, some of your extra revenue, something that you would put aside, some of the extra revenue or profits into a certain type of structured whole life insurance policy. Some people call them dividend-paying whole life insurance policies. Some people call them high cash value, which means there's a lot of cash reserves in these whole life insurance policies, which can be borrowed against. And when they're borrowed against, they're not income, so you're not taxed on it. But technically, your money continues to grow at a guaranteed rate year over year, whether you borrow the money or not, and whether you pay it back or not. In addition, because you're not sinking your money into a restrictive retirement plan, like a IRA, a 401k, you can borrow against the money you've paid in whenever you like, without getting penalized, without paying any crazy fees, and without getting hammered on your taxes. Then, when you want, you can repay what you borrowed back into the policy and typically have a small enough interest rate on what you borrowed that it's either low enough that you're not getting killed on interest, or even in some cases your gains each year are far outpacing what your interest payments would be. In fact, you're paying back yourself in essence. And we can talk more about that too. I mean, there's going to be some questions if you're interested, and I've got a lot of answers. To put it simply, again, you become your own bank. You put money into a safe, secure, and guaranteed rate of growth with a certain type of structured whole life insurance. That money is yours to access whenever you need it, without all the hassles, the fees, the questions, the penalties you'd normally encounter if you tried to touch your retirement plans or investments before you were allowed to. And speaking of retirement planning, there's another area where infinite banking really does a number for you too. And there's a little bit more of a modern day example. First, another question. How many college football fans out there? There was a big story a few years back featuring the University of Michigan coach Jim Harbaugh and his contract. There were some changes made to extend his contract, and these effectively made Jim the highest paid college football coach in the country. But it was the nature of the contract updates that caught everyone's attention. For example, because of this unusual approach that I'm talking about that these other guys have used, some estimates suggest, and I can tell you, I know that it could end up being even more, and I can explain that too at another time. But they suggest that Jim will have around $46 million in tax-free cash throughout his retirement. And talk about a sweet deal, right? It's all built around the concepts, you guessed it, infinite banking. So, needless to say, there's something going on here that you need to pay close attention to if you're a business owner or anybody else who's in charge of your own financial fate, which is most of us. Because, man, we all know that things can change in a heartbeat. And this is what I mean when I say you can use infinite banking to help ensure your business is recession and life-proof. So let's start with the economy. Look, right now we're in a boom cycle, but at some point, if you've lived long enough, you know we're due for another recession. I mean, I can go back to 1986 and the Reagan tax law changes and the devastation that had in the commercial real estate and residential real estate markets. And then 1987, the crash on Wall Street. They called it Black Monday. Biggest percentage drop in history up to that point. A single day drop. Of course, there was the crash of the dot-com bubble in 2000. And we all know that there was incredible devastation in 2008, 2009, and for, the following succeeding years, what they called the Great Recession and credit crisis. This is a good time to be starting packing some of it away and making yourself the banker so that you're ready to have the cash to keep your business going. I'm not trying to be Mr. Doom and Gloom because, I'm just living in reality as far as I can see. Let's just look at the obvious. Our system hasn't changed. We still have the same economic structure, same monetary system, same unsound money practices that we've always had. And that means these economic downturns and cycles are just a matter of when, not if they're going to happen. And what I love about infinite banking and its approach is that your money is still growing at guaranteed rates each year through these special life insurance policies. The difference is these policies aren't market dependent like so many other investments, meaning your money is much more safe if and when the economy goes into the tank. Now let's forget about the market for a minute and talk about real life. And what I want to share next is not meant to be a sob story, right? We all could share some story about the downturns in our lives. This is not a pity party, but rather just to illustrate that real life happens to all of us, myself included. The years 2014 and 2015, around, an 18-month period, was the worst period of my life, and my children's too. In July of 2014, I lost my wife and my best friend to cancer. She died of breast cancer. This instantly made me a single parent to our 3 children. And next, about a year, 10 months later, my father, who was the best man at our wedding, he passed away. He lived a good long life, but, just throwing, tough times on tough times. And that was tough to lose, a great man in my life. But to top it all off, while this was all going on, 6-7 months after my father passed away, our family home caught on fire and literally burned to the ground. Everything was lost, and I could say, the tough thing was it was the home my kids grew up in. It had the markings of Mom written all over it. She had done all the decorating, the painting. I'm not saying all this, right, to make you feel bad or gain sympathy or anything like that. Feel bad for me. I just want to illustrate a key lesson, one that could help you out significantly if life ever throws a curveball at you like it did for me back then. So at this point, when our house burned down, I was devastated. All I wanted to do was rebuild our house and have it be the same house as before, inside and out. Now, I thought I was covered 100% with my homeowners insurance. I even had a special rider that paid extra for the, basically I had what they called full replacement coverage. So there's a face value on the policy, and then if it costs more to rebuild the same house, then they will pay the difference to do that with this full replacement coverage that I had on it, right? So I'm thinking everything's going swimmingly. To rebuild that same house was $450,000. The face value of the policy was, about $350,000. But this writer entitled me to get the difference once I got the quotes into them and so forth, and pay me the $100,000 between the $450,000 and $350,000. And since I thought I was totally covered, I didn't want to wait for the insurance company to take time to do their bureaucracy and pay things out, right? I just wanted to get started. I wanted my family to have a home. I felt terrible. The least I could do, given everything, my kids had been through. So I borrowed money from my 401k to pay for the rebuilding of the house to get things started. Now, I got some money from the insurance company, but I needed more. My thinking was that I would pay it back, within 60 days so I don't get penalized once the insurance paid out, right? So little did I know I would end up having to fight the insurance company tooth and nail to get anything more over the face value. And, it cost me money. I hired a lawyer and, back and forth. And, we had a court date, but we ended up settling outside of court because they were going to just try to run me dry. The result, because I took longer than I expected to pay back my 401k, I was hit with the penalties. Obviously, I was willing to, pay the taxes if I had to, but I wasn't really planning on it, right? I mean, that becomes income. And you tack that onto your existing income, and then I was in a bigger tax bracket, higher tax bracket. So, in the blink of an eye, thousands of dollars went down the drain, which is kind of totally crazy, considering it was my money. I'm the one that, saved it, worked for it. I paid the fees for the mutual funds to trade, these stocks around inside. Why should I have to pay to access what's mine? Why should I have to pay a penalty? There's really, no reason. Well, this is where infinite banking would have been a total lifesaver for me. With infinite banking, there would have been no tax penalty, no early withdrawals, no paperwork, nobody trying to approve me or deny me, no hoops or fights or anything remotely like that. Instead, I would have near instant access, to my money whenever I needed it. And here's my point. You might think having your money in a 401k or an IRA or similar investments is the safe thing to do. I kind of beg to differ, but, hey, maybe it could be. If you never need to access your money for decades, or if you don't mind paying additional taxes and fees, if you do, before a specific, 59 and a half, and then after 70 and a half, okay. So here's my question. If you're putting all your extra cash into those types of untouchable investments, what happens when life or business throws you a curveball, right? What happens when you need cash fast? But my point is the same. Life will throw you these types of curveballs, especially if you're a business owner. You've been through it. So congratulations for being on here, for being successful to this point. It's not easy, right? We all know that. And maybe it's not something dramatic or negative, but rather it's just what looks like a great opportunity, so it doesn't have to be a negative thing to utilize this technique and approach. So I can go on, but to say infinite banking is a concept that's legitimate, has long been utilized with some of the brightest minds in business, and is easier than ever to utilize for you and me. At this point, I hope you're excited about the benefits of infinite banking, not only for your business, but for your personal world too. The key question is, how do you apply all this? How do you apply all of this? I found out firsthand in diving deep into this topic that there is so much information and nuances and decisions you face that's not easy to go it alone, but I can make it simple. I can make it easier. I can help you. I'm a certified practitioner with the Nelson Nash Institute, and now I'm taking that insight to help business owners, individuals, families implement infinite banking in a way that's going to be the best, safest, and most beneficial approach for your unique business in your given specific situation. Because I know you'll have the inevitable questions like, where do I start? What type of policy do I look for? Where do I find the money that I'm going to, put into this type of policy, this type of approach? How does this whole process work at a logistical level? Who should I put my faith and trust in terms of companies, policies, etc.? What if I already have a bunch of money tied up in a 401k or an IRA? Should I just leave it there? Should I keep contributing to it? And that's where I can help. I've transitioned full time into helping business owners with this concept. Like I said before, there's no sales pitch here. Rather, I'm on a mission. I want to introduce this to as many people, as many business owners. There's so much I want to share with you. So if you want to learn more and see if infinite banking is going to make sense for you and your business, given your current situation, I'd be happy, more than happy to talk more and give you my honest opinion. All you have to do, you'll see a link popping up on the screen, and that will enable you to book a time to chat with me on the phone. Again, this is not a sales pitch. I don't have a program to sell you or anything like that, right? I'm not going to call you up and start asking for your money to buy some program to learn about this and so forth and so on. And of course, if it makes sense and if you want to explore using this concept for your business, I'd be delighted to help you start that process. We got to walk before we can run. And I need to ask you some very specific questions before I can ascertain, if infinite banking is going to make sense for you or not. So please click the link if you'd like. You see on the screen, and let's set up a time to talk, okay? And while you're doing that, I want to say I've really enjoyed our time together today. Thank you for listening. Thank you for staying till the end. And I hope you've enjoyed it too. And I look forward to talking to you all soon. Thank you so much.